You want to be successful at your investing journey? Then don't miss this step-by-step roadmap in today's video. Welcome to the investing journey, and today I'm going to show you 7 easy steps to prepare your investing journey for 2026. If you follow these steps, I can almost guarantee you your investing journey will be a long-term success. Don't miss out on step 7, which is almost the most important step of them all. So let's start with step 1. Why do you want to invest in the first place? It's always important to find your goals that you want to achieve with your investing journey. If you don't have any goals, there's nothing to achieve and you probably will never start in the first place. Are you doing it for yourself? Are you interested in investing, or are you just doing it because someone told you to do? If you have no interest in it, you will lose the motivation and don't stick to your goals. What is your time horizon in investing? Are you investing for your retirement or just for a short period of time? This is an important question you should ask yourself because it's defining your investment strategy in the long run. And last but not least, how much risk are you willing to take? Can you handle it if your portfolio is in the red for some time, or do you panic immediately? The risk tolerance depends on how you can handle bad times and if you thrive for higher returns, which are often coming with a higher risk. The time horizon is a very important question that you should answer before deciding on how risky you want to invest. If your time horizon is 20, 30 or 40 years, for example, you can naturally increase the risk in somewhat compared to if you only want to invest for 5 years. If you checked all those boxes, we can go on to step number 2. Education is key. Always educate yourself. Learn about different stocks, ETFs, index funds, crypto, or alternative assets like, for example, real estate. The important thing is that you know the different options you have in the investing world. Read investing books like The Intelligent Investor by Benjamin Graham, or if you want to start with something light, I would recommend The Psychology of Money by Morgan Housel. Eventually, you're going to watch some YouTube videos like you're doing right now. The important thing here is that you don't follow into the hype of any stock or crypto. You might get lucky, but the chances are high that you will burn your fingers and maybe never invest again. Another helpful thing you can do is maybe talking to friends or family members who have already started investing and talk about their do's and don'ts they learned while investing. Step 3. Choose your strategy and set rules. Do you want to be a passive investor, so you only invest in the broad market like an index fund or an ETF and don't really do anything else, which is totally fine, by the way? Or do you want to be an active investor who chooses individual assets like stocks or crypto? But remember step 1, your risk tolerance. Investing in individual stocks is obviously riskier but maybe has higher returns than an ETF. If you want to be an active investor, always do your research. Set your investment rules. How much money do you want to invest monthly? Set the amount that you feel comfortable with and stick with it. How long do you want to hold your assets? If planning on holding an asset for the long run, don't panic sell if the price is going into the wrong direction. Find out why the asset is falling and maybe it's an opportunity that can be exploited. How much diversification do you want or need to feel safe in the investment space? Do you feel safe putting all your money into one stock or one crypto? Probably not. Maybe if you have 10 or 20 stocks. But don't over diversify. If you need to buy 100 single stocks to feel safe, just buy an ETF or index fund instead. Step 4. Choose your brokerage account. Select your brokerage account and your investing tools. Don't take any broker you see an ad on YouTube or Google. Compare the brokers you see, check them out for low fees, safety, and easy to use platform. For example, Robinhood for the US or Trade Republic for Europe. Choose tools for your portfolio tracking and financial planning. For example, GetQuinn, that's what I use for my dividend portfolio tracking. Start with a low amount to get used to the ups and downs in the market. Step 5. Set your investment plan. Create your investment plan today to be prepared for the future. Decide how much money you want to contribute every month. Start with a low amount to get a feeling for it. Don't go all in, just set a monthly amount you feel safe and stick with that. Pre-select your core assets like an MSCI World ETF or an S&P 500 ETF for less risk. This should be your main focus in my opinion. And if you are more into the whole investing game, You can add some stocks or crypto for your risk balance if you want to. Automate your contributions. If the investment process is automatic, you won't think about it and the chances are higher that you're going to stick with it. Review your portfolio time to time. From my own personal experience, I know this one can be difficult because, especially when you're starting to invest, everything is exciting and you're probably going to check your portfolio 10 times a day. But trust me, the less often you check your portfolio, the less often you worry about it. Step 6. Never stop learning. Always engage in lifelong learning. With new news every day, the markets can change rapidly. So always keep updating your knowledge. Never chase the hype of a hot stock or crypto. As I said before, you're probably going to burn your fingers anyway. Network with other investors that aim for the same goal as you do. For example, on GetQuinn, I can build my community and always keep up with what other people see or write in the investing space. It's a great free-to-use app with a lot of helpful features. And this is no sponsor, by the way, just my personal opinion. Congratulations, you made it to the last step. The last and most important step, just start. Starting your investment journey is the most important step. Things won't always go the way that you want them to go, but you will learn from your mistakes, grow your knowledge, and eventually you're going to succeed. If you follow these 7 steps in 2025, I am sure that you will have a great investing journey ahead in 2026. I hope you enjoyed the video. I wish each and every one of you a successful investment journey. See you guys in the next video.